Welcome back to the Dividend Diplomats YouTube channel, everyone. You know us by now. We are the Dividend Diplomats. So what are we going to talk to you about today? We're not talking to you about Vanguard, high dividend VYM. We're talking about its competitor, the arch nemesis, everybody's the number 2 or number 1 in everybody's hearts in the high dividend ETF community. We're talking SCHD and about the big portfolio rebalancing that just happened the last couple weeks.
Guys, before we dive in, subscribe to the channel, give us a thumbs up. We appreciate all the love and support as we cover vast array of dividend topics, dividend stocks, dividend news, dividend increases. And like today, like Bert said, dividend ETF rebalancing with Chuck Schwab's dividend equity ETF, SCHD. Bert, you own it, and I can't wait to see what this was all about.
Yeah, I don't own the largest portion. I definitely don't own the same size as your Vanguard. The reason I own it is because I moved over some funds into a Roth IRA. I moved them from an old 401k. I split the investment for VYM and SCHD 50-50 right down the middle. So I have a very vested interest in learning what happened with SCHD and why. So what happened? Let's start there with SCHD. Every year, SCHD rebalances its portfolio. All the investments it has, they aren't stagnant, are they, Lanny? They're not stagnant.
They are not stagnant. No.
Which is good because you want to make sure that the funds that you're investing in are continuously monitoring and continuously watching what is going on within the portfolio. So each year there's an annual rebalancing that goes down at SCHD.
There is. And man, this was quite the rebalance. It hit quite the news on Twitter. A lot of discussion about it, what stocks they added in, what stocks they removed, what weights they shifted, who's in the top 10, who's not in the top 10. Again, they do it every single year. And this is to make sure that the ETF in and of itself fits the criteria and the strategy of that ETF.
Yeah. So what's the criteria? They track the Dow Jones US, Dividend 100 index. They look for funds. They build a massive screener, much like we do when we run our dividend stock screener. They look for companies that have increased their dividend for 10 years, market cap on a float adjusted basis of 500 mil, and a minimum of 2 million 3-month average daily trading volume. So they're looking for some of the big companies. They take it.
The big ones.
Yeah, they sort that yield. They sort it by yield. They take that list, they chop it in half, and then they pick from the top half. So they're picking the highest yielding of that group, which I thought was interesting because that's how they never have these low growth ones that you see built into a lot of the other funds. They don't have the Microsofts, the Googles, like a lot of other funds, because they're focusing on the top 50% of the yield.
Top 50%. There's some other criteria as well, such as what is it, industry or sector diversification, as well as some cash flow metrics that they're looking for, Bert.
Yep. So yeah, once they pick out their group, they then take a bunch of those things. They look at the industry, they look at free cash flow to total debt, they look at yield, they smooth out the 5-year average dividend growth rate. And by doing that, what they do is they avoid the stocks that have the one massive increase and then a bunch of really small ones. So they're looking for ones that are consistently growing that dividend. They balance that. They use their algorithm. They type it in, they hit the enter button, and then it spits out what the portfolio should be for SCHD. And that's where we are.
Gotta love the algorithms, guys. And that's SCHD has been doing very well. They just had a big recent quarter one over quarter one, 2023, 2022 dividend increase over 15.25%. So congratulations to all the SCHD shareholders right there on the exchange traded fund. Down about 6% this year in 2023. So Bert, there's a lot that happened in SCHD during this rebalancing. What big names were actually deleted or removed in and of itself within this exchange traded fund?
Yeah, so let's start with the additions, the fun ones. AbbVie, ticker symbol ABBV. Chevron, ticker symbol CVX. And Lanny's favorite, UPS, ticker symbol UPS. Those are the big ones. There's obviously a chart. I'll put it up there with all the additions on there. And some of the other smaller ones notably are like Wendy's, Dart, and Ford. But the big ones, the big time increases and additions there were within the big three, AbbVie, Chevron, and UPS. And I actually thought the deletions were funny too. Deletions, IBM, ticker symbol IBM, Cummins, CMI, Prudential, PRU, Genuine Parts Company, GPC, and Cincinnati Financial, CINF. Those are gone from their fund right now, which I think
Bert, do you own any of those stocks that they deleted?
I actually own 4 of the 5, ironically, IBM, CMI, GPC, and Cincinnati Financial. And the reason is it's not that it's sounding off alarms that they're bad. They're just not seeing the free cash flow growth. And that's one of the big things that SCHD looks for when they're building it. They're looking for companies that have stable and growing free cash flow. The projections for those companies that are deleted are cash flow is going to decline slightly. So get them out of there. Get them out of SCHD.
So quite a few names that got deleted. Again, smaller additions with Wendy's, Darden, and Ford. Now, again, that was just some of the shifting of what stocks are included and what stocks are now excluded. But that still doesn't mean that they were done. SCHD also did a little bit of rebalancing in terms of weights. Weights in there, at least the top 10 for what you can identify here. And Bert, there was quite a shift from who fell off the top 10 and who also shifted positions within the top 10. I think there were, was there three names that fell from the top 10?
Yep. So let's start with the old top 10 from one of their recent reports. We'll say what it was. It was Broadcom, Verizon, Texas Instruments, Home Depot, Cisco, Lockheed, Merck, Pepsi, BlackRock, and Coca-Cola. That's a new one. Lan, you want to rip off the new top 10 here?
The next top 10 here, the new top 10, the 10 of 10, the king of kings, guys. We've got AbbVie, ticker symbol ABBV. We have Cisco, ticker symbol CSCO. We have Pepsi, PEP, still on the list. We have Broadcom at AVGO, Pfizer, PFE, Texas Instruments, TXN, Coca-Cola still KO, the knockout punch, Verizon, VZ, UPS, and Home Depot HD.
So I think that's interesting. If you pay attention, two of the key additions, AbbVie and UPS, are in their top 10. So they went ham into these positions. AbbVie's obviously the new top position. UPS is number 9. They weren't messing around. They're buying a ton of these companies and a lot of the stock to go into it. So I think that's interesting. And the other key piece of this too is the weights. They don't just wait every year to change the weights in this. And I think this is interesting as you continue to learn more about SCHD. They're constantly monitoring. They have some little fail safes in there to make sure that one stock doesn't become too balanced in their portfolio. And they look at those on a quarterly basis. They'll make sure that the individual securities aren't weighted too much above 4%. Prices are going to fluctuate. So some are going to be above, some are going to be below. They typically stick in that 4 to 5% range. They make sure no one sector is over 25%, which is also interesting. So you don't get stuck in 50% tech stocks, like you'll see in some of the other ETFs. And then lastly, I thought this was interesting. The sum of the stocks with weights greater than 4.7% cannot exceed 22% in their portfolio. So if something pops in a few of these stocks, they're not going to have 5 stocks that make up 30% in there. That's how this is. That's what that's preventing.
Gotcha. And yeah, the top 10 right now, the latest weights, 37.33% are those top 10, with the highest again being ABBV at 4.29% and lowest at Home Depot, 4.05%. So all above a 4% weight within SCHD. Now, Bert, there were 3 names that fell off the top 10.
Yep. No more Lockheed, no more Merck, and no more BlackRock. They're out of the top 10.
BlackRock makes sense with everything that's been going on. Lockheed, dang it, that's all I got to say. And then, Merck, obviously ABBV and Pfizer are in the top 10 now. Mm-hmm. So obviously they removed a healthcare and they replaced it with a couple of healthcare.
It's interesting. And I thought one little funny caveat in this as you're learning it, this is very topical based on what's going on. They use prices as of December 31st as they're going through this. So the one potential hole in this strategy is it leaves you susceptible to stuff that's happened in 2023 that might not have been captured by 12/31. Lanny, has something been going on in the last month that that may have impacted what could have been in this portfolio for SCHD?
There could have been some banks in there, maybe some bank stocks. More than likely there were some bank stocks in here. Obviously, they weren't in the top 10 list, but I'm curious what they'll do in terms of what their weights will look like anyways come Q2. And then obviously this time next year, I wonder what this top 10 will look like. Maybe they've added.
Yeah. Who knows? And I think that's kind of the funny thing is, sure, it's susceptible, but that's why you don't get too heavily weighted in one sector so that the impact of the financials can't take down the entire ETF. That's why you cap it at a 25% mark. So that's interesting. So let's take a step back and summarize here kind of what's gone down. SCHD did its annual rebalancing. They've added in some big time stocks into their top 10 now, with AbbVie and UPS cracking the top 10 and Chevron getting added, but not in the top 10. They've removed some of the legacy companies that have been seeing some declining free cash flow. So what they're doing is they're positioning themselves to continue growing and announcing 15% dividend increases compared to last year. I think that's kind of a key step to make sure that you're growing your dividend, rebalancing, finding new stocks that are increasing their free cash flow. I think this is great.
Yeah, I mean, I'm looking at the top 10. I own AbbVie, I own Cisco, I own Pepsi, I own Pfizer, I own Verizon. My wife owns Coke, and I have UPS. So
Yeah.
7 out of the top 10 I own individually in our household's taxable portfolios.
Yeah, I own all of those but Coke. We don't own Coke, so I own 6 of the 10. So great minds think alike. This is very much, it's obviously, it's a great, they have a lot of data available. So that's why you buy funds like SCHD. That's why you buy funds like VYM. They can use the power of their research and their tools to help you diversify when you might not be able to do it on an individual basis. This is fantastic.
Yeah, I mean, and obviously it seems like we're in great company with the stocks that we do buy, because it seems like SCHD was also on the hunt as well for these dividend stocks. Obviously, they must have been looking at my portfolio, scooping up all this United Parcel Service. No, I'm just kidding.
Yeah.
But it seems like it's still a really good ETF with what's in there. Would you agree, Bert?
Yeah, I would very much agree. And it makes you wonder if they're trading what, around 70, 75 is it time for me? I've been on my quest to find something to do on a weekly basis ever since Johnson & Johnson. Maybe this is it for my wife's portfolio. Just 2 shares of SCHD every week, about 150 to 170 when the price pops up. Just nice, repeatable, easy, quick hitting. It might be time to start doing that.
Yeah, I don't see why this couldn't be a great foundation ETF to really continuously, unless there's some other big undervalued individual stock to buy, just to keep buying SCHD. I would tip my cap to you, Bert, if you guys started doing that, because it just increases your passive income. And the growth has been there from an appreciation plus a dividend growth standpoint. It's a really good ETF.
Yeah, and seeing this live, going through this exercise, you can see that they care about the ETF. You can see that they're doing things to make sure the integrity of what's going down in the dividend growth ETF is there. This was very helpful to see, to help me keep learning more about SCHD too.
So guys, what do you think about SCHD, the ETF, the best dividend ETF, as some say, out there? What did you guys like or dislike about the rebalancing, the big rebalance, the big shakeup? Let us know in the comments. Also, guys, subscribe to the channel. Give this video a thumbs up if you haven't already, as we all continue the journey to financial freedom.
And if you're not with us, you're against us, everyone.
That was Bert and Lanny from the Dividend Diplomats, over and out.